Hey everyone, welcome back to Corporate Decoder. Today S.R.T.S just filed an 8K report about their recent shareholder meeting, and I'm seeing a few key takeaways. Quick note, this is not financial advice, just my take on public filings for educational purposes. The big story here is how shareholders voted on important company matters like directors and executive pay. The company behind Sensus Incorporated, which trades as S.R.T.S, recently held its annual meeting of stockholders on May 29, 2026. This report, filed on Form 8K, tells us what happened at that meeting and how shareholders voted on crucial decisions. This part of the filing is all about the votes. Companies have to report how shareholders voted on proposals. For SRTs, there were three main areas of focus: the election of directors, an advisory vote on executive compensation, and the ratification of their auditor proxies, which are basically votes cast by mail or online by shareholders who could not attend the meeting in person were solicited. So, even if you were not there, your vote was counted. First up, let us talk about who is running the show. Shareholders voted on electing directors. Eric Sachetta and Michael J. Sardano were up for election as Class 2 directors. Their terms are set to last for 3 years, ending in 2029. Both of these individuals were already serving as directors. The filing shows us the breakdown of votes. For Eric Sachetta, a significant number of shareholders voted for his election, with 5432247 votes. There were 516,567 votes against and 270,440 abstentions. Importantly, there were also 5,000,719 broken non-votes. These are shares held by a broker that did not receive voting instructions from the beneficial owner. For Michael J. Sardano, the votes were also largely in favour, 4702852 for votes, against 1,346,063 against votes and 270,339 abstentions. He also had the same 5,000,719 broker. Non-votes. This tells us that the majority of voting shareholders supported the continuation of these directors, though there was a notable number of opposing votes and a large block of broken non-votes, which can sometimes indicate shareholder apathy or lack of clear direction from beneficial owners. Next, we have what is often called a say-on-pay vote. This is where shareholders get to voice their opinion in a non-binding advisory way on how the company's top executives are paid. For 2025, the stockholders approved the compensation of the company's named executive officers. The vote count here shows 4740572 votes. For the executive compensation, there were 856,128 votes against and 722,554 abstentions. Again, we see 5,000,719 broken non-votes. While this vote is advisory, meaning the board is not legally required to change anything, a strong opposing vote can send a clear message to the company's leadership. In this case, the majority supported the pay packages. The final item on the agenda was the appointment of the company's independent registered public accountant. Shareholders voted to ratify the appointment of Carr, Riggs and Ingram, LLC as the company's auditor for the fiscal year ending the 31st of December 2026. This is a standard procedure to ensure transparency and trust in the company's financial reporting. The vote here was overwhelmingly in favour, with 107,38792 votes for the appointment. Only 148,466 votes were against and 432,715 abstentions. This strong approval suggests shareholders are comfortable with the chosen auditor. Looking at these votes, Sensus Incorporated appears to have had a successful annual meeting in terms of shareholder approval for its board and auditor. The advisory vote on executive pay also received majority support, though it is always worth noting the abstentions and broker non votes as potential indicators of shareholder engagement or concerns. On the broader picture, Sensus Incorporated, or SRTs, is a company in the medical device sector with a market capitalization around $47 million. It has about 60 employees. Recent news shows a mixed picture, with some reports highlighting the backing of directors and auditors, but also mentioning insider stock sales and a stock price drop following Q4 2025 earnings. The company did report positive first quarter 2026 financial results and business highlights in May, which might have influenced the positive voting outcomes. The top institutional holders like Pacific Ridge Capital Partners, LLC and Vanguard Capital Management, LLC likely played a role in the voting tallies. What this filing confirms is that, for now, the current leadership and their compensation plans have the broad support of the shareholders who cast votes. The risk I am watching is how these votes translate into future performance, especially given the backdrop of recent stock price weakness and insider selling. What I'm actually looking for is sustained operational improvement that justifies this shareholder confidence. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. Like, comment, subscribe, and join our Discord community, all linked below.